Well, I'm a little concerned, Tyler, that the market having rebounded up until this week is maybe a little bit over its skis in the sense that we've gotten some less than helpful news with respect to antiviral drugs. We've gotten bad economic numbers across the week. Clearly, at least today, the market's looking past durable goods orders and the like. We're coming up on an unemployment report. The CBO just projected a second quarter economic contraction on an annualized basis of nearly 40%. So I still think we have a lot of numbers to get through, and those earnings and the various forward guidance estimates we're going to get as well. So I'm a little concerned. I'm also concerned that this reopening of some states may lead to a relatively quick setback. And that would be, I think, disappointing to the markets as well, leaving them at risk for the next couple of weeks at least.
Yes, I'm sure Jim would agree with that if there is a setback as businesses reopen or a resurgence of the virus, that would be the last thing the economy or the markets need to see. Jim, you think we are on the edge of, I won't say the great rehiring, but at least of some rehiring. How robust do you think that will be in light of the fact that I would guess that a lot of businesses, we just heard from Jay Gray down in Atlanta, they're waiting for customers to come back. They can bring the workers back, but if the customers don't come, they're not going to last long.
I think we're at the very beginning of this rehiring, and stores are opening. When stores were forced to close, everybody got laid off. If you trickle back in and you hire half your staff and then a week later you hire 75%, those numbers are going to build. And I think when you look at the unemployment claims going forward, we've probably seen a peak there. The continuing claims might take a week or two for the data to flush out, but you're going to start to see continuing claims go down. And you also saw the stimulus checks, and people started spending just last week. And I'm sure as we see the daily data over the weekend, we'll see another uptick in spending. So I think the worst is behind us. We certainly have a bunch of bad numbers still to go. But I think the fundamental reality is the worst is probably behind us.
You like a couple, Jim, of retailers, which I think a lot of people might find curious, but you have cogent arguments for both of them. One of them is Ulta, which your company owns about 5% of, we should point out. The other is TJX, the owner of TJ Maxx and Home Goods, my wife's favorite store, by the way. And make the case that those are positioned to do well.
I think there are two big factors there. One is when the customer comes back, what is she going to buy? I don't think she makes the huge purchase, but buying from TJX or buying from Ulta are those little luxuries in life that are very affordable, particularly when consumer balance sheets had been dented a little bit. And then secondly, and we heard some news today about JCPenney, the competitive situation is changing rapidly. And I think companies like TJX and Ulta Beauty that have staying power, they're going to pick up a ton of market share from the weaker competitors. We see this every single downturn. The winners get stronger, the weaker get weaker or go away, and that's going to play out this downturn also.